Hello, folks. Welcome back to another episode of T2SMC Trader. How are you all? I hope that everyone is cool. I'm also fine. Don't forget to give me the thumbs up. Don't forget to subscribe to my channel if you are new. So over here in this video, I would love to explain the price action. I have executed the video yesterday PM session. I have uploaded that entry video to my Twitter. So some of you actually asked me by the private message why I pushed my button. I told you guys that I'm gonna make a video so that it's gonna be clear. So I am here with that specific video why I pushed my button over there. What all the premises over there to pushing button over there. Now, before telling that, I wanted to clear one more thing. Whole PM session I didn't do anything because I wasn't in front of my chart because I was watching ICT's live streaming to make the summary of ICT's episode 18 ICT 2024 mentorship. That's why I wasn't here whole PM session. But when I came in front of my chart, it was near about 3:30 something like that. Then I pushed my button and I noted off. I annotate my chart with lot of notes. It's still over here. You can see the execution video to my Twitter and I will actually explain the things over here as well. Now, when market actually trade that area, the daily bullish fair value gap, you can see it tapped over there and also the week 50%, weekly week 50%. Then market started to go higher. I told that my intention is now it is going toward that Monday high. So I was bullish. When I was bullish, I have seen that this bullish fair value gap around that area at the same time this breaker block. Now the breaker block is from here to here. This is the breaker block. As you can see, still this breaker block hold the price. See, this breaker block is holding the price. At the same time, I have this bullish fair value gap and price came here to this bullish fair value gap. It went little higher, come back again, made this relatively equal lows and went higher, made that relatively equal highs. After seeing these things, I was bullish, so I was looking for every bullish period. So over here, I have this consecutive order block. Okay, so here this is the 50-minute consecutive order block. When it tapped to this consecutive order block, I started to look for buy. So keep that in your mind. When it tapped to this bullish fair value gap, I was looking for buy. Then time is the factor. I will explain everything from 1 minute chart. Everything will be clear. Just keep that in your mind. I was bullish. I had this relatively equal highs. Market tapped to this bullish consecutive order block. I was looking for buy. So I am not interested to look for sell. Let me go to the 1 minute chart now. So over here, this is the 1 minute chart. Let me put it in a right way. So over here. So this is that 50-minute bullish order block. If you can see, just let me make it little thicker here. This is that 50-minute bullish order block. Okay. Now that was that relatively equal highs from 15-minute chart. This is that relatively equal highs. I have this 15-minute bullish fair value gap around that area. I saw market came here, made this relatively equal lows. This low and that low. They are relatively equal lows from 1 minute chart. When market came here, it has made another relatively equal high. See this relatively equal highs over there and this relatively equal highs already I have in my market. This is the shallow run. Let me mark the shallow run here. Can you see the shallow run? So when I see the shallow run, which is my obvious liquidity, I would love to mark the high. Here you will get an idea why when I talk about the shallow run, why it is the obvious liquidity. Okay, I mark the high of that shallow run, that is my buy side liquidity. That doesn't mean that market is going to take that shallow run right now. It can go over there after a little working with the lower portion. Now I have this relatively equal lows. Can you see very clean equal lows? Okay, then market actually come back again here. Again, it has made this relatively equal lows more stronger. Then it has taken over here. It fall little bit. I don't care about there because it was outside of the PM session. My PM session is until 4 PM. I was in front of my chart when market was around that area. So 312 or something like that. Okay. I saw that market came here to this fair value gap, around that fair value gap. Now keep that in your mind. I'm not depending on 1 minute setup. In my mind, I'm thinking about 15-minute chart. What do I have from 15-minute chart? I see that I have this 15-minute bullish order block. So I'm going to depend on that 15-minute chart, not 1 minute setup. Okay. So market came here around that area, make another relatively equal highs, went lower, trade that 15-minute bullish order block one more time. Then market started to go higher, tapped over there here. Okay. I was here when market started to fall, and when it went through this bullish parabolic gap, my expectation was it will tap to this parabolic gap, it will go higher. I wasn't sure. I didn't push my button over there because why I wasn't sure that market is going higher. First, there was no market structure shift. Look, there was no market structure shift. Market was going to come here. Am I going to take buy? No. At the same time, it left that sell side liquidity over there. I have my mind in my mind. I have that it has the bullish order block. It is going higher. So I am only looking for buy. When I'm looking for buy, I'm watching only the buying opportunity, not the selling opportunity. Here I have this relatively equal lows, no market structure shift. Should I push my bottom from that bullish parabolic gap? Absolutely not. It went lower, take that liquidity by using this parabolic gap as an inversion parabolic gap. So it tapped to this inversion parabolic gap, it was going lower. I write it down over there. See this, right? My mind is telling me to take short. I have uploaded this video to my Twitter. You can recheck if you have any confusion. My mind is telling me to take short. That means when I saw this type of things, my mind was simply telling me that okay, maybe market is going for this sell side liquidity. Did I push my button over there? No. Why? Because my higher time frame is telling me you should only take for buy. You should only look for buy, no sell. My mind was telling me, I ignored my mind. So sometimes your mind will tell you, brother, forget about everything, just push your button to take sell or something like that against your bias or against your price action. Don't support your mind. I just ignored this thing. I don't want to support my mind. Then I saw market actually reclaimed that 15-minute bullish order block, then made another order block. So this is the order block from 1 minute chart. The lowest down close body close candle. Trade over there. Did I push my button? No. Why? I was confused. Is this going to work as the inversion parabolic gap again and take that liquidity or not? I am bullish, so I'm not looking for sell. Keep that in mind. Then I saw this candle. It went through this candle, this parabolic gap. See this parabolic gap? It went through that parabolic gap, closed inside this. Okay, this bearish parabolic gap, new bearish parabolic gap. Now, here is the part. Is this bearish parabolic gap going to hold? It will depend on the closing. Where did it close? Above the constant and constant? Yes. What does it mean? That means this parabolic gap is now weak. It is the weak parabolic gap. Okay. It doesn't want to hold the price. If it wanted to hold the price, then it would work with a lower portion of this bearish parabolic gap. So when I see this candle has closed over there, I didn't wait to close it above this parabolic gap. I didn't close. The next candle open, I took my entry. Look over there. This is my first entry. When it opened, went little higher, tapped to this parabolic gap, I took my first entry over there. Then it come back again to this bullish parabolic gap. This bullish parabolic gap. I added one more over there. Okay, around that area when it tapped to this bullish parabolic gap. Then market went little bit over there, went higher, take this primary or initial buy side liquidity. Where is my buy side liquidity? This obvious liquidity. Am I going to hold it until that area? No. Why? This is the extreme liquidity. I'm not interested to hold my trade for that extreme liquidity. So that was my primary liquidity. Okay, when it has taken that primary liquidity around that area, I just write it down. Buy side is taken. Where was my stop loss? See this small parabolic gap over there? My stop loss was just below this parabolic gap because I was believing that order block has been traded. It has been rejected from this 15-minute bullish order block. Now I have the inversion, that bullish parabolic gap, inversion parabolic gap, new order block here. That was the new order block. 1 PDRA, 2 PDRA, 3 PDRA. So also I have the wick and this parabolic gap. Lot of PDRA. If market wants to go below this parabolic gap, then it has to break lot of things. So my stop loss was set over there. Please watch that thing. I have uploaded it to my Twitter. You will get the confirmation. Okay. So my stop loss was safe over there. Okay. It come back again to this water block here. I added one more. Now you can see when I added one more, when it tapped to this water block high. Okay, that was the high. Tapped to this water block high. I added one more, but market was overzealous. It went lower until this parabolic gap. Here is a very small parabolic gap. This candle high, this candle low. It has traded until that area. I was watching the min threshold of that specific bullish order block, new order block. Okay, so over there, I got this fake breakout. One candle close below this min threshold. My premises was market is going higher. I didn't want to see body will close below this min threshold, but it has done it. So I didn't add anything over here. I was just waiting to see, can it fall? I mean, can it give me the speed now? So I write it down. I need the speed when it has traded that last parabolic. I write it down. I need the speed to that specific candle. When this candle appeared over there, I write it down. Need speed now. Okay. As you can see from the next candle, boom, market went higher. Where did it close? Above that high. When it closed over there, I write it down. Don't wanna see any black candle now. So this black candle, I didn't want to see that. Why? Because market is very near to the closing. It should not give me any kind of opposite candle that will break my heart. I didn't want to see any kind of black candle because time is the factor over here. It doesn't have the time to spend some times over here. It has to take the liquidity. Where is your liquidity? This is your liquidity. What is that liquidity? Oh, sorry, let me actually. What is that liquidity? Obvious liquidity. Okay, so you can see I actually closed it little below to that rejection block. I closed it to the rejection block, but it tapped to this buy side liquidity perfectly. So this is now new buy side liquidity for you, new buy side liquidity. Keep that in your mind. Either way, I didn't want to see any black candle. There was unfortunately a black candle also over there. At the same time, that was my stop loss. Okay, I just write it down. Stop loss is safe here because when I have seen it has traded this parabolic gap, went higher, made this unfilled parabolic gap. See this parabolic gap that was unfilled. So my stop loss was just below this unfilled parabolic gap. I write it down. My stop loss is safe over there when price was around that area. So price was over there. I took a partial above this initial buy side liquidity and I closed my trade to that rejection block. So that rejection block was my target. That's why I love the rejection block instead of the high. My stop loss was over there. Market has given me the speed. Look at the speed. And finally, boom. Here is one more part. I write it down. 1549 last candle to hold this trade. So if you see this candle, okay, look over here on the bottom. 1549. That is the candle which has given me my things. I got hit my target profit by 1549. As I always tell you, don't push your button after 345. Don't hold your trade after 349. Look at the next candle. This 350 candle. Can you see how it broke? Can you see how it broke from 350? Even if it doesn't hit my target, I would close my trade around 349.50 second. So before 10 second of 350, I would close my trade wherever it would be. I would close my trade because the 350 candle is the dangerous candle. I don't want to hold my profit over there. So either way, I was lucky, so it has given me my target and I got profit. So over here, what did you learn? When market is falling and I write it down, my mind is telling me to take short. Don't listen to your mind. Instead, listen to the price action because price action is only giving you the profitable entry. Use the logic why you are going to look for buy because you have higher time frame. How to use the PDR, how to manage your stop loss, how to take the partial, how to close your target. Why you should not target the extreme high. Instead, you should look for some kind of 1 minute high or sorry 1 minute liquidity. Okay. All of these things also important according to my analysis or according to my teaching. These ICT concepts. If you think it is insightful, just don't forget to give me the thumbs up. At the same time, if you have any confusion, don't forget to let me know in the comment box. So thank you guys for watching. Until the next video. Cheers.